What's up, guys? JJ Fade 23. I'm gonna make a quick video today about a mistake that I see a lot of people make this mistake with small caps. Guys, I've gone over this a lot of times with Quanted, right? Even if you have no other criteria except $1.50 to $10, gap of at least 45%, pre-market volume 1 million, market cap 350 million or less, you still have great stats, right? On the median, well, it doesn't matter, median or average. Close red, 75%, that's amazing, right? But the average spike is fixed, the median spike is 16%. If you have the outliers in there, it goes up to 38%. But the point of this video, guys, I went through these charts because I see this mistake happen all the time with a lot of traders. So I just went through a bunch of these charts, not all of them, just so I could show you some examples of what I mean. Like, guys, never mind the fact that MLGO was a Chinese stock, right? But you have to be aware, all right? When you're looking to short a gapper, it's not just about the resistance that you want to short into, right? The daily levels or the pivots, whatever you want to call them. Pivots, right? It's not just about the pivots that you want to short into. You have to be aware of what's right below you, too. Like, guys, why was so many people shorting this off the open? Never mind the fact that it's Chinese. Look, you have a pivot right here, all right? When a stock opens and you don't have a lot of room to the most recent or any pivot that's right below, you have to be very careful. Let's say, all right, obviously, guys, the stock is at $1, so it's gapping up like 200%. That's a big gap. It's okay to short it when it's gapped up that big. You just have to be aware that you have a pivot right below. So if you short the open and this stock comes down and holds anywhere near this pivot, as soon as that goes back through the open price, you might as well just cut it because that short's not good anymore. You have to, the better stocks have no pivots. Well, not only do they have good stats, good gap stats, they're not Chinese, but they also don't have pivots right below for the stock to dip and rip right off of, right? That would be like if this stock was opening right here, right? You know, if this stock was opening right here, I wouldn't try to short this with that pivot right there. Or if I did try to short it on a good trigger, I would want it to break that. If it went like this, though, if it just dipped and then went right to here and went right back through the open price, I would cut it instantly because now we have a green candle. Now what's happening here is this candle that was below the open is now turning green and making a bottom tail green candle. So that usually happens when they're going to squeeze off the pivot. And then you get this, you know, and then you end up having this big-ass day that a lot of times still turns into a top and tail, but it's not just going to reverse right away. It's going to squeeze first a bit, maybe. It's just because it dipped and held the pivot. So then you end up getting something like this, maybe. But you already had, you know, once it goes back through that open price, you have to be very careful. So if you look at this, right, $3, which we identified this in the room. Anyway, I don't trade Chinese stocks off the open anyway, as you saw in my tweet. But you know, you open right here, you know there's a pivot right here. Once it starts to hold near here and starts to go back through that open price, that's most of the time going to squeeze. So let's just look at, I went through the, guys, what I did was went through the top page here of like the ones that squeeze the biggest, all right? See these, the ones that squeeze the biggest? I went through the charts. All right, so let's go look at some and I'll show you what I mean. MGIH. I'm always being careful for this because this is how you get jammed up, right? All right, so that was right here in 2.9. All right, look at this. Same idea as MLGO, right? Stock's opening, but it has a very, very strong pivot, multi-touch pivot right below. So what does it do? It opens, it starts to dip. As soon as it goes back through that open price and reclaims this level, you might as well just cut it because it's going to squeeze. Right? Now, that would be better if this was like, say this was opening up here. All right, say it was opening up here, all right? And then you had all this room down to a key level. That's great because by the time it gets here, it's probably just going to keep selling off because all these people trying to long all day are bagged. All right? Everybody in the morning volume session is bagged underwater, so it has a slim chance to reclaim. So you just end up getting this. Instead of what I just showed you, you end up getting this kind of candle. You get a big fat paint stripe, which I love. When I go look back at, and guys, when I go look, when I have a stock gapping up, let's say for MLGO, that's another thing, right? You got to look at the history, right? MLGO, all right? Look at this, you guys. This thing gapped up, ripped. Why am I trying to short this on day one with pivots right below when the last few times it's squeezed like crazy? Remember, history repeats itself, right? So let's go. The next one is Holo. Holo. Oh, what was the date on Holo again? Sorry, one sec, guys. Holo was 2/7. Holo 2/7. Right here, guys. It's the same thing, all right? This thing's right here, 2/7. How are you shorting this? Where are you shorting this to? Where are you going to short that to? There's no more room to go down. You have a key level of support. You have a lot of candles right below. There's nowhere for that to go, right? So what does it do? It squeezes, right? Next one you got is Saidu. Saidu, what was the date on Saidu? Saidu 12/16, all right? All right, right here, guys, 12/16. Look, same idea, right? Key level, multi-touch pivot, right below the open. What does it do? Dips into that level, goes back through the open, then boom, squeeze. Also, look, squeeze, squeeze. So I'm not trying to short these guys. If they have pivots there and they don't have good chart history, I'm trying to smash all the stocks that are gapping up way off pivots and have charts that look like this. All right, I want to see. This is what I want to see when I look at the history of a stock that's gapping up. I want to see that. I want to see maybe something like this. I want to see maybe only a little tiny pop at the open, but both red. You know, red, it pops a little, goes right back through the open that way, the reverse way. I love that when it pops at the open, then falls back through the open level, and then turns red on the day below open. Yes. And then the volume dries up. Stay in that short. You don't want to see this. You want to see this on the past gappers. You want to see this. All right. You don't want to short this when the stock has spikes. 1, 2, 3, 4, 5 days. 1, 2, 3, 4 days. Not paint stripes. All right. MDIA. Where is MDIA? MDIA 4/5. MDIA. You'll see what I mean though, guys. When you start to like 4/5. All right. So oops, shit. 4/5. This one was a little more tricky because you had 1, 2, 3 day gap up, but you also have a very, very clear pivot right here, guys. Right. So it's a third day gap up, which that's very enticing to short, but you want to make sure it falls below that level. And guys, I would probably ignore this. Why would I ignore this? Because look, when you have a multi-day gap up, the target is usually the previous day high. So $1.80 to a 227, that's not that much range to short it to, right? But you also have a pivot right here. So if you see it, hold that pivot and start to push through the open. Got to be careful. Really got to be careful. All right. If this previous day high was down here, and these pivots weren't here, okay, now I'd smash it back to the previous day high. Let's see what else we got here. That's MDIA. We got MLGO again. MLGO 6.4. Well, I already know that's a squeezy. That's why I didn't trade it the other day until it was really squeezed everybody out. MLGO 6.4 right here. Okay, another one, guys. Look, key support level, right? Pivot. Right here, and then it opens, it dips to that pivot, and then it squeezes. All right, so not a lot of range to the downside without pivots in its way. CURR, let's see. Is it CU? Yeah, CURR 1.8. 1.8. 1.8. Look at that. That's a beautiful setup right there. Look how big that gap is. Yes. You have a pivot right here, but look, even to that next pivot, even to this next pivot, 350, you got a whole dollar. And then to previous day high is way down here. What did I say that date was? Sorry, I'm getting 1.8. All right, so 1.8 right here, guys. Look, multi-touch pivot again. It opens right at multi-touch pivot, and it's pretty far from this most recent resistance. So it opens, it dips, goes back through the open price, holds that pivot, and then squeezes. Right? So it's not like they all do this, but this is what I always am careful for. I don't like the short stuff that has a lot of pivots right below, very clear, obvious pivots, because I'll still short it if the gap's big enough and it has good gap stats. But if I see it start to dump, curl, and start to go back through the open, boom, I'm out. I'm not going to get squeezed. I'll wait till later for the top and tail. VS. What's the date on VS? VS, we got 1016. 1016 on VS. Again, right here, guys. 1016. You have a very clear pivot right here. Another pivot right here. And you don't have a lot of range, right? You got like, there's no range to the first pivot, to the next pivot, even right here. 260, you only have like, well, you got about $1. That's not bad, but this pivot you have to be careful for. So let's say the stock gapping up 118 to, that's gapping up a pretty big percent, right? Now, the other thing that I'm careful for is when your stock's gapping up a lot of percent, but you have very clear pivots a lot higher that can act as magnets, right? Very clear pivots much higher that will act as magnets. I don't love to see that. So if the stock has still dilution, good gap stats, and everything else, then I'll still try to trade it, but I don't want to trade it if there's a pivot right below. And if I do trade it, if it hits that pivot, goes back through the open, again, boom, I'm going to get out and I'll just regroup after I get the top and tail, because still it has a history of making top and tails, top and tail, top and tail. So let me get everybody else squeezed out first, then I'll hit the lower high. Basically, you see this top and tail, so I want to wait for this to intraday be going boom, 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 right? Once it gets topped out over here, topped out intraday, bam. Maybe you get a double top, maybe you get a big stuff candle, fake breakout at the highs right there, right? And then it starts to sell off, break support. Now I want to see the volume really go way down. I like to see the volume be like a 50% volume reduction. And then I'm going to be hitting it right here on the first lower high. And then I'm going to take it to end of day, because that is the friggin' thing shows me top and tail should close really weak. So I'm going to hit that lower high, not try to catch the top, and I'm going to have great risk reward using my fibs right here as it starts to make a fake breakout right here, or a stuff candle, or a double top, whatever. As long as it starts to make higher highs and higher lows. I want to see a lower low, and then I want to have volume start to dry up, and I want to hit that lower high. All right? So PHIO, let's see that. What's PHIO? PHIO 113. PHIO. Oopsie. PHIO 113. All right, here we go. 113. So look, guys, again, see the same kind of theme. Look, pivot right here, pivot right here, pivot right here. What does it do? It opens, it dips, hit the pivot, goes back through the open price, squeezes. All right, squeezes. And also you see over here it's squeezed, over here it's squeezed. So why am I trying to short this right off the open? It has a history of squeezing. SNGX. SNGX 79. SNGX 79. Oh, another chart, history of squeezing, right? Look, 79. We have a very key support level right below. Multi-touch pivot, 1, 2, 3, 4, 5. We have a history of squeezing, having a top and tail. So again, this is not the chart that I want to hit off the open, because we have pivots right below, and it has a history of making a top and tail. So what am I going to do? I'm going to do the same thing I just said. I'm going to wait for it to squeeze people out, go up into a resistance level, and then I'm going to hit the lower high. I'm not going to try to catch the top, because the thing's up a fucking 100 and something percent. Well, on the day, it's actually up fucking 700% or something. But get the idea. You don't have to be the first to short. Let it squeeze everybody out. Let it hit the fake breakout, a stuff trigger, a low double top. Come down, make a lower high, volume dries up, hit the lower high, and then fade it to end of day. Hoth. What we got? Hoth. But you see what I mean? You got to be real careful of those pivots right below like that, especially on the ones that have a history of squeezing. Now, if the stock has a history of red paint stripe, red paint stripe, red paint stripe, whatever, then we'll just short it, and hopefully it'll break through that pivot on the way down. But when it has a history of a top and tail, no, you got to be careful on that. Hoth 1.7. Hoth 1.7. Hoth 1.7. All right, again, guys, right? 1.7. Look, pivot right below. What does it do? It dips into the pivot and it squeezes. All right? You just wait for the lower high. Don't try to hit it off the open, and unless it has perfect everything else. Great gap stats, no red flags, dilution. And again, like I said, if you do hit it off the open, unless you're a scalper and you're covering the pivots, if it holds this pivot and starts to go back through the open, just get out. That's it. But let's just do one more. GNEN. What's that? Is that GNEN? GNLN. GNLN. 812. GNLN. 812. Again, guys, look. pivots right below. Pivots, multi-touch pivots. What does it do? Opens, it dips, hits the pivot, back through the open price, squeeze. All right, so you just be aware of that stuff, you know. Be aware of pivots, very clear pivots and multi-touch pivots right below the open level because you don't have much range sometimes. This one wasn't bad because you had resistance right here, right? You had a pivot right here. So it's the stock's opening right here. If it starts to like reject at the open and you break below that pivot, you can short it and at least take it down to the next pivot. And then at this point, you just move your stop to even. You're in the driver's seat. If it comes back up through the open, just cut it for a win. It's, you know, that's just the safest way to trade. So, and then again, you know, once it squeezes this much, just wait for the lower high. You don't have to try to catch this, guys. Sometimes these things can squeeze like crazy. You don't have to keep trying to catch the top. Just let it fucking top out. Well, you're going to let the volume die. Watch. Guys, remember when I started trading MLGO? I don't know if you see my Twitter, but look. Guys, see this? Front side. Look at the volume. Boom, 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 boom. Look at the volume. And then once the volume breaks, look at these are going up to like 3.4 million, 3 million. Once this trend breaks, guys, and you got a nice fake breakout right here and then a big rejection, now look, the volume's only down to, right? It's like half of what it was over here. 3 to 3.4 and now down to like less than a million sometimes, 1.5 million. And that's when I'm trying to short these monsters on the backside when the volume's depressed. I want to see the volume be at least 50% reduced from the highest volume of the morning run-up. So I'm always going like this on my charts and showing people in the room like, look, guys, once the volume is reduced by at least 50%, you're looking for backside trades over here. Preferably, I mean, ideally, you're looking for like the volume to be reduced. Stock comes down, and then you get a nice lower high up into here on low volume to short and then take it all the way back down. See, I made a mistake, which I wrote in my tweet. I shorted this lower high right here, even though I knew it was probably going to take a fake breakout or something crazy to end this China stock. But as you can see, guys, look, 3 million, 4 million. This was right here. This was still up to 2 point. This is still up around 3 million right here. This wasn't a 50% volume reduction lower high. The volume was still almost as high as these run-up volumes. It wasn't done enough, and I knew it when I was taking the trade, but I said, you know what? It's already up like ridiculous amount. Maybe it will make a lower high here. I can short it back down to support, and then if it curls back up, who cares? I'll already take most of my profits. But yeah, it didn't. It kind of did do what I thought, but it did a fake breakout first instead of a lower high right here, and that's fine. I cut it right there. Once we got the guys, I always trade in progression of my setups. Okay, so I know exactly what I'm doing as the day unfolds. Okay, I'm not trading because it's Chinese. Now, big crack. Okay, what's the next setup in my playbook? It's a lower high setup right here. All right. So the very first setup that I can trade is a lower high above the 61 fib. If I get stopped out of that, the next setup in my progression of playbook is now it's probably going to go back to the highs. I need a fake breakout or a stuff trigger at the high. And here it is. Bam, fake breakout. So I shorted that. Covered down to support. Now, guys, I'm always going in progression of my playbook. It goes from lower high to fake breakout. If the stock doesn't squeeze up like this and gives me another fake breakout, okay, boom, then what do? I can either short the fake breakout or the next progression is the lower high again. So let's see right here, right? Right here, it came up. I wasn't at my desk for this fake breakout. I missed it. But now we have a lower high. The problem is this lower high still wasn't on 50%. Well, kind of. I mean, if you look at it right here, the volume's down to like 1 million. Over here, it was like 3.4. So it was. I could have taken this one if I was at my desk. Right here. Because we got the fake breakout trigger. We got the lower high over the 61 fib. But I still had some on from over here with a wide stop. So I wasn't at my desk for that. So I just shorted right here and right here as I posted on Twitter. But this is what I mean though. And now guys, if this thing starts to crack even more, where's my next short? Well, then I switch to the 10-minute EMAs. All right. So now, well, actually, on this one, I would switch to the 5-minute EMAs first. But it's always in progression. 5-minute EMAs with the pre-market data on. So once we get that crack, then the next setup in my playbook is a strong move down, flag off the 5-minute 8, which we got. Flag off the 5-minute 8. Now, after that, I would look for the 10-minute EMAs if there's still enough room before it goes down. but it's always an exact progression of my playbook. So I know exactly this setup could happen right now. If that setup doesn't work, this is the next setup. If that works or doesn't work, this is the next setup. They're exactly playbook setups that I know exactly how to trade. They're never random trades, right? They're always the next progression of whatever the setup will be in my playbook. Never random. And I suggest that you guys all do the same thing, because without that, you're just out here just shorting and covering, or what? You're just trying to short into daily levels with no triggers, no playbook, no system. I mean, that doesn't work good. You go on tilt easy. You don't really know what you're doing. You can't back test random trades. So it is what it is. Anyways, I don't want to make this video too long. Happy Sunday, everyone. Can't wait to get back to trading tomorrow. SPY's gapping up a little bit. Came down to support, as you can see. You would expect, guys, look, usually on SPY, it's either 5-minute or 10-minute EMAs. I like when it's making big moves to use 10-minute with pre-market data off. As you can see, we have a big demand zone right here. And guys, obviously, when you come down to a demand zone and you made a big drop like this, you're extended off the 10-minute 21.34, you're probably going to bounce from that demand zone, right? Like right here. Demand zone, it flushes hard, gap down, way too far off the 10-minute 21.34, and so it bounces from there. Again, we're a little extended off the 10-minute 21.34, so I would expect it to bounce back at least to the 10-minute EMAs, and then we'll see if they can reclaim or not. Anyways, have a good night, and remember, I'm not a financial advisor. I like to talk about trading. I'm an entertainer.